Hello, Immad. Thanks for coming on. This is the first time where we are going to do an official intro. There's a lot of stuff that I know about you. I've been following you on Twitter for a super long time. But what I want to talk about, there's a few things. So first, I'm going to do a little mini intro. And then what I'm hoping is you can intro yourself. So first is you are the co-founder and CEO of Mercury. And Mercury is a banking startup that basically provides banking for startups in the same way that Silicon Valley Bank does. You're a prolific angel investor, having invested in a bunch of companies. I think the number is over 100, including Substack is one of the sort of high profile ones, but obviously, and Airtable and a bunch of other ones as well. And so
And
how am I doing so far?
Airhouse as
And
well.
Airhouse, of course,
Airhouse as well.
Airhouse. Yeah. But Immad, please go ahead. I'd love to hear your bio and you're from the horse's mouth, so to speak.
Thanks, Julian. Let's see. So I'm at about 300 investments, of which
Why haven't you invested in Vowel?
Okay.
Obviously I should. Maybe I've missed the boat there, of which at least last year, 12 were unicorns. I don't know what count we're on now. And outside that, I've done 4 startups. I've been doing startups since 2006, which I don't know if second time founder means multiple time success, but I always say it means I failed for a really long time.
Yeah.
And now I do Mercury, which basically provides bank accounts to startups and other US businesses. About 400 employees. We started in 2017 and we're profitable as of last year, which is nice.
That's amazing.
Congratulations.
Thank you.
Big deal, especially right now.
Yeah.
And
Was that planned or is that coincidental because of the rise in interest rates?
Yeah, I really hate fundraising. That's one of the reasons, at least.
You're so good at it.
Now I'm much better at it, but from 2006 to 2016, which were my last 3 startups, there was lots of points where fundraising was really hard and, failed multiple times. And so I've always kind of liked building a business that's, has good unit economics. And, obviously we were not profitable, but we were always in a position where we were building a business that wasn't that far from it, if that makes sense. We always had reasonable unit economics and did not have crazy kind of burn and things like that. So that allowed us to have that flexibility. It also helps that interest rates are higher. We're one of the few businesses that actually benefits from that since we have a lot of deposits from our customers.
That's great. I'd love to kind of talk about how we met Immad, which was kind of serendipitous for just to kind of explain the network effects that the San Francisco definitely used to have. I think it still does have, but we met through a mutual friend. You were neighbors down the street from him in San Francisco, Glen Park, yeah. And we just started hanging out, and I think you got invited to a couple of your parties, and we got to get to know each other. But it was just very serendipitous that I don't think a lot of people realize that how much that, especially that used to happen in person, and how many people actually do meet. And I wanted just to kind of just throw that out there for people that are listening, as far as you don't get those opportunities remotely. Really
Right.
don't. When I moved from Canada, I went to every single meetup I could go to. I don't know anybody. I would go to any party or whatever. That's how I built my network. I think in these remote only days, you just don't get that. And people still think that you could just build these amazing companies, but there's so many things that can happen on purpose or by accident, or you just meet this person at this other party or something like that. There's still that still exists in Silicon Valley. I don't know what your thoughts on that are, if that still is a thing. I don't know if you still go out and you're still in San Francisco, what your view on that is. I know Julian, he's in Canada. Andy is in New York, mostly running remote teams. I'd love to get your perspective on still being in San Francisco, but also I'm assuming that a lot of Mercury now is run remotely.
Yeah. I think it depends what you want in life. I think you can make it work in other places. I started doing a startup in London. That was my first startup. And then I was like, this is just what I want to do. It was just so much fun. And I love talking about this stuff and, I wanted to become an investor. And if you're that level of kind of bought into doing it, then I don't see, assuming you can, your family commitments allow it and things like that, I don't think there's a better place to be than the Bay Area, even now. And I meet quite a few people who are moving back here. The problem is just nowhere else is the same density and purpose. Like I think New York is the only other place, at least in the US, that,
Yeah.
you know,
Still
hey, you
not
go
as,
to a
still not
party.
as, still not as good.
Yeah.
It's not
Hey, you go
very
to
happy.
an event or party, and every other person you speak to is
Right.
either
I
a
can
tech employee or founder or aspirational.
I consistently get invited to tech events in San Francisco. I was telling somebody yesterday, please get me invited to tech events in New York. I've lived here since 2013. I don't think I've been invited to an event since 2019. Do
There's a
people
reason for
hate
that,
me?
Andy.
I know, seriously. Am I just an
Maybe
asshole that
you.
nobody wants to spend time with? Or did I fall off everyone's mailing list?
Do you get invited to non-tech events in New York, or is it just like,
Tons of non-tech
Okay, so maybe it's not you.
I think no one knows I live here.
that is confusing nowadays. Like I was just like a second ago with Kevin. I was like, where do you even live? No one knows anymore where people are.
He lives in the cloud.
It's true. It is real. It's definitely real, the San Francisco bet. The part that is, it's an issue of trade-offs. It sounds like now running things remote, effectively, the power of the local thing is no longer relevant to you. Would you say that's true?
Well, it depends what you mean. After this meeting, I'm going and having coffee with an angel investor that I've known for 10 years. There's no purpose to it. I'm just meeting up with him. And I'm sure something will come from that. He'll introduce me to a company, or, you know, if in the future I ever start a company, I can ping him and say, hey, you know, I just wouldn't do that if I wasn't here. I don't think remote changes that much. The problem with remote is everything is very transactional. Every Zoom
Yeah.
meeting, everything is like for a purpose.
Yeah.
I'm not going to be like, let's hang out and talk for 20 minutes. It's just so, I don't know.
Mm.
Let's hang out and have a coffee for 1 hour seems way less burdensome than let's hang out on Zoom for 20 for some reason.
Yeah.
It's
Yeah.
just-
I'll bring my own coffee, you bring yours.
yeah. I don't know. It just doesn't work. Like humans are like creatures of
Yeah.
Type.
Jeffrey Gitomer is like an old business guru type of writer. I obviously know a lot of it, right? I've written a few books, so I know all of those randos. And he would just say, people want to do business with people that they like. And
Yeah.
and you only
Mhm.
find out who you want to do business with and who you like by meeting a lot of people and talking to a lot of people and getting really clear on being in those conversations. And in San Francisco, it's true, you would just randomly run into tons of people. And I remember doing that. I don't want to talk about whether SF is worth it. It's a weird city.
It
It's a
is.
super weird city.
It's worth it.
But definitely that part that you're talking about is real. And I don't know, maybe you could live in Palo Alto. I mean, anyway, it's.
I think all of the Bay Area is very similar. I don't think being in the city of San Francisco. I mean, this whole like idea that San Francisco is its own city and like the surrounding cities are not part of it is a weird American concept anyway. Like the whole metropolitan area here is, I think, well,
Immad,
I think
I'm
we all
curious.
agree.
I want to hear about there's a comment that you made that is really personally fascinating to me. And I just want to dig into it a little bit. You ran a company, is it your previous company, Heyzap? Is that what it was called? Am I right about that? Yep. You sold it, you say so on the Mercury website, that you sold it for $45 million in, I forget what the year was. I'm not sure if it even says that. But there was a sort of apocryphal quote a little bit that Kevin told me about, which is, once you started Mercury, and at some point, I'm not sure exactly when this was said, but one founder turned to another and said, oh, this is what product market fit feels like. And so I think around the table, going to Kevin and Andy, and obviously you, Immad, you said it, or someone in your entourage said it, and myself, I would include myself. We've all experienced product market fit, but you're actually making me doubt that I ever have by this quote kind of like bubbling up in my world. And so first of all, what is that feeling? Is it like the Mark Andreessen PMF article where it's pulling the company, the market is pulling the company out of the team? Because I always felt like I have always had to push in the companies that I've run to get them over the edge, so to speak, to get them working.
Yeah. I think people are too, like, life is nuanced, and like this product market fit thing is not like one binary moment that happens in the exact same way to everyone. I just think it's a different thing for different people in different circumstances. My previous company I'd say in 2015. So we ran that company for 8 years or something.
Mm.
It took 7 years to really find something that had like true product market fit, which is from the start of 2015 or so. And that was a very different feeling of product market fit than the feeling I had at Mercury. At Mercury, it was like we launched and it was just like crazy for the next 6 months and didn't have to do any sales or marketing or anything. We were just like trying to keep up with demand and fix things, which is a very different thing. And I don't think most people experience that type of product market fit. For my previous company, it was like iterate and eventually it just got easier to sell and we would win more
Right.
of these sales. And it was much more like a B2B
Right.
salesperson. So I guess one factor of it is like, what is your sales motion or your go-to-market motion? If your go-to-market motion is based on if you're consumer or like self-service or like we were in some ways like a Mercury's kind of prosumer, it's like founders kind of picking their own tools. And I think you can get like a different type of product market fit versus a sales driven thing.
Right.
But both can have product market fit. It's just with sales driven, it's just like, how easy is it to convert the lead? How easy is it to get new leads? It's the kind of thing. So yeah, I think people get it at degrees. I mean, I've invested in a lot of companies, a few of them successful. I would say, without I guess they wouldn't mind me saying it. Apart from like Mercury and Substack, I haven't seen any other companies that have had that kind of product market fit where it just is very organic and grows like
Explosive.
Yeah, I think that
You're talking specifically on like the self-serve product market
Yeah.
fit.
Self-serve and the fact that it doesn't require like a ton of like sales, marketing.
Yeah.
And it seems to happen like very organically and very early on.
A question though, for like enterprise, look at the Snowflake, for example. You'd obviously say that they have great product market fit, but like their enterprise sales, and it takes a lot to convince some companies to stay with them. Do you like delineate between the kind of onboarding, self-onboarding, the product sells itself versus like the enterprise sales? Do you not really see those as the same thing?
I mean, there's just a ton of ways to get users, right? It's like you can be a viral product, you can be a SEO driven product, you can be a sales full enterprise product, you can have different levels of enterprise product. Like product market fit is just this thing that's just become popularized after Rahul wrote that like amazing essay about it. But really, like before then, we talked about like CAC, payback period, and it's just like when these metrics match up and it is good, right? If your payback period is like less than 12 months and you have a very big market that's going to continue to scale, you probably have product market fit.
It really is there's a utility to it. This is kind of digging into, it's like inside baseball a little bit, but the feeling is important to put into words. Because if you don't put it into words, that PMF thing, then what happens is people will struggle and think that their company they're going through the right thing when in fact they just haven't hit that bit. So describing now that your description, I have felt that. I felt that a breather. I remember this is just happening. It definitely didn't feel like, oh my God, all my problems are solved. It felt like I had a whole new set of problems. But if PMF as a phrase didn't exist, you would never know exactly what you are seeking out. And you wouldn't know whether you'd hit this special place or not, which is basically pre-search and post-search. Pre-search was like, we're looking for a thing that has magic. Post-search is, we have a thing with magic. We're trying to scale the unit.
Yeah, it is important to know when you have something that like you should be scaling versus something where you're like still figuring out. There is a different phase there. I would also say if you're the type of user product that requires thousands of people to use it, then you do really need something where like the pull is organic. It's very hard to go sell individually to thousands of people. We have 100,000 plus businesses now. There's just no way I could have done that, right? It has to be organic. Like whether you're consumer or a type of thing that's like very broad in its reach, SMB or something. In that case, you need that pull from the market and that is like something organic and a route to that organic growth.
So I have one.
Go ahead.
So you've done 4 startups. Obviously, banks have product market fit by definition. They take money, they lend money, they hold people's money, and they give you a checking account. And a lot of them are crappy services with terrible software. Do you think when you started Mercury, you had this unfair competitive advantage? You had this Twitter following, you had all these people who you knew from being an angel investor that would sign up. Was that part of your go-to-market? Or was that just an afterthought and something that happened by luck.
I mean, I'm a big believer in creating your own luck, right? So if you map out my Twitter following, I think in 2016, I didn't have that much. It's probably like sub 10K for sure. It'd be interesting to look it up. But I made a deliberate thing saying, okay, I want to do a tool that's going to sell to founders. I should try to, and I have, I guess, created internal stories and content in my head. I should try to put that down on Twitter. And I made like a very deliberate effort, and it was a lot of work. I only actually started angel investing in 2016 as well. And part of it was with the thesis that, I'm going to start a new company in 2017 and I'll learn a lot. And I didn't really think, oh, these will be our users. And not that many of them were. So yeah, a lot of that was deliberate. I would say, again, it's not luck. I mean, I was in Silicon Valley for a long time, but being able to raise money, having enough investors I knew did make Mercury possible because it took us a year and a half to launch it and also to get kind of the bank partnerships and things like that. Back then it used to be pretty hard to do. And if you didn't raise a reasonable amount of money, it would be hard to go get the bank partnership. Last year it became actually easier to get bank partnerships. I would say so it's actually getting hard again because of kind of a pullback from bank partners and this kind of BaaS space in general. But anyway, fintech is this kind of thing where you do need to raise a reasonable amount of money to get over just the launch hurdles. And that was something that I had been building. So
it does remind me a little bit of a story that does not, your story is in progress, but is going well and we believe will end well. But it does remind me of a set of users that in like Justin Kahn's thing, Atrium, where it's like the first users were startups. It was obviously super well networked. He was well financed. And then it's really public that he wasn't able to find product market fit, even though VCs do obviously use a lot of lawyers. Startups use a lot of lawyers. And there is that kind of we're all going to use it and we're all going to invest in it thing. And it's interesting to consider. It's like why the legal part of Justin Kahn's company, even with 100 million raised or something, never worked out, and why yours serving on the finance side is it has so much demand. I don't really have an answer. I'm just sort of like posing the question to the panel a little bit, right?
I was an investor in Atrium and Justin's an investor in us. And especially when we were launching our seed round, like Justin was describing Mercury as a Atrium for banking quite a bit. I think the fundamental difference is, especially the way we do banking, it was about being a product company.
Right.
That was our differentiator. It's, SVB exists, like it's a fine bank for startups, but they're just not a product company and their product, I won't speak badly of them, but if you guys have used it, you can attest to the product. That's just very hard when it comes to legal services. If I'm going to do your Series A, there has to be a lawyer, and there's only so much product you can apply. But funding companies is about like different levels of risk, right? Like when Justin Kahn did Atrium, it removed distribution risk. It removed a bunch of different risks. The only risk that remained is, do people want this product? And
which is the biggest risk.
Which isn't the biggest risk for, this is called second-time founders, but I think first-time founders actually don't have that as the biggest risk. I think I have a reasonable number of friends that are like first-time founders, and I'm like, they just don't do obvious things correctly. Like they can't necessarily build it. They can't necessarily get distribution after they build it. There's a whole set of risks that are like,
I want to know what those are.
I would love to hear this too, actually. We're all up.
There's also, before you launch a company, there is a bunch of risks, right? There's like, did you get the right founder? Like tons of companies. I would say almost most companies fail from first-time founders because they just have two co-founders that just don't like each other. Yeah. And they even build it. That's not, depending on complexity of product, that's not always given. Will they be able to raise money / hire people? I mean, there's tons of risks that are like not at all a given. Before it even comes to, I launched a product and the product's going to be huge because everything else was correct before that.
I also think second-time founders, the first thing we think about is, how am I going to get people to pay for this? And I think first-time founders think, how am I going to make this perfect?
Yeah.
Well, it's also, I don't think people are that good at evaluating like startup ideas. I actually used to think that ideas don't matter that much, but like before, for the first 10 years of me doing startups, I kept picking bad ideas. I would say that was one of the biggest reasons they didn't work. When Mercury was just a really good idea. And I think but it wasn't like I wasn't trying to pick good ideas. I wasn't that good at judging ideas and probably
Okay.
didn't spend enough time on
Are
it.
you able to tell in retrospect what you are good at as a founder? I think probably around this, if you look at all the people here on this podcast, you could tell, okay, so Andy's probably good at A thing A. I think I could tell what my skill set is with regards to being a founder. Are you now looking back at these 10 years of companies, are you able to tell what your skill set was and or whether maybe it wasn't refined enough or it just wasn't relevant for those companies or something? Like, what as a founder have you discovered that you're good at in a unique way?
It's a good question. I mean, I think the two, I don't know if they're the most important things, but the things that I value in myself and I try to encourage are like being very persistent. I mean, it's both a fault as well, because in my last company, like we went through
Right.
4 pivots and
8
we just
years. Yeah.
didn't give up. Yeah. But it's also, I think, a valuable trait that I have. And then the second one is like optimism, which actually ties a little bit to persistence. I think it's hard to be persistent without feeling like every time we did a pivot, I was always like, fuck, this is it. You know, I was like,
Right.
Yeah.
this
Right.
time I have it.
I've been there. Yeah.
Yeah. So I think like both of those actually go hand in hand. But I just think that like, yeah, things are always going wrong in startup world. Like even when you're very successful, like in fact, the more successful you are, the more things are going wrong.
Totally.
That's true.
Because there's, you know, as a CEO, I try to be like the main, I try to make it so my only job is try to identify the biggest problem and try to focus on that. So it always feels like I'm like, like dealing with one problem or another. So it's
Thinking about it, I'm wondering what scale that begins at. Does it begin at a Series A? Because there's a few people that I coach, right, as founders, and they're always first time. And there is this clear transition, and maybe it's sort of post PMF or something like that, but it's a transition where people begin, and when they begin, they have to do all the jobs. That's very clear. There's not a lot of people to do the job, so they must do all of the jobs, no matter how menial, whatever they are. And then there is a phase after which they do what you do, or they should, which is they have to do the biggest problem and only the biggest problem, and everything that they delegate, as David Maister once said, they should. And so
at least with Mercury, I actually did it. So from day 0, pretty much, I would focus on the biggest problem. That was actually something I did differently. Obviously, if there's literally 2 of you, then it's different. But
Yeah.
we raised 6 million early on and there was 8 of us altogether. That was the first kind of crew before we launched. But even at that phase, I was already like the core skills of having someone in engineering, having someone in design, and having someone in product. Like we had that, and that was like not in me. So I wasn't any of those. So I could just pick whatever was like the most useful thing to drive. The only thing we didn't have was like, I mean, I don't think you really need marketing or sales before you launch anyway. And
Right.
obviously I was responsible for all the fundraising, VC relations and things like that. But yeah, I deliberately set it up to not be the bottleneck. I think it's really important to try to not be the bottleneck. So like if you weren't there, everything is happening without anything stopping. But if you're there, you can accelerate things. I've always
Wait,
tried.
say that again. It sounded really good. And I say it slower, like in a really cool way. I'm actually totally serious. It sounded like a real gem.
I try to make it so if I'm not there, everything is going smoothly. And if I am there, I can accelerate things faster. Like,
Got it.
uh,
Okay.
and I actually tell people, like, especially with Mercury, it's got more scale now too. The level below me should also be acting like that. Like everything
Right.
should, if you
First.
literally didn't show up, everything should be going up and to the right. But if you show up,
Mhm.
like bend that curve to be like even
Yeah.
more up and to the right as it was. Yeah. I mean, it's also, at least for me, more fun. Like I don't want to be the bottleneck because I don't want to wake
Yeah,
up
it's the
and
worst.
I have to do these
Mhm.
things. I often like talk to founders and they're really stressed out. And I'm like, yeah,
Delegate things. Delegate things.
yeah, I'm
Founders
like,
have
why are
such a
you the
hard time
bottleneck for
delegating.
things? Like,
Yeah.
I don't think it's good habit for like founders in general, but like really
Mhm.
any exec to be the bottleneck on just basic functionings of your business. Like that just
Right.
shouldn't be like that.
It's a bottleneck when capital is a bottleneck, I think, right? Bottleneck is when capital is no longer a bottleneck, then that's
mean,
that.
You do the most important thing. So like you try to, like before we launched, I did the fundraising, I did the bank partnership. And then afterwards I was like, I don't know what else to do. Let me just go back to programming. And then I built, 1/3 or something of our front end. So I was helping push things forward. But I was never the only person doing those things.
Right.
It's a bank partnership. I was the only person on the.
I have a question actually about and trying to get kind of really deep into, especially in your field. So one of your competitors, I'll call them out Brex, they turned off for a number of customers, maybe all of their SMB customers and their banking product. Can you talk a little bit about if all customers, if you as a startup, you should serve all customers? Are all customers good for you? Should you actually be saying no to some? And I'll even start off with myself. Like for us, we help other brands with fulfillment, and some of them just aren't ready to actually go and outsource that. And our partners really just don't want to take them on. They're really too small. They have a lot of questions. They are not that profitable, all of that. What learnings have you had? Do you have any restrictions on the types of customers that you can bring on? Have you built that into the product so everything is self-serve? How do you think about that?
There's this like classic-ish thing in kind of, I guess, business land when it comes to, being an enterprise company and being a mid-market company and being like a SMB company. I'd say like before I did Mercury, I didn't necessarily understand why that was. I was like, why can't you just be all of them? Why can't you be an enterprise mid-market?
I'm there with
SMB?
you.
Right.
But the reality is, if you pick any one of these and then you build, you build the product around that, right? Like you build a product that makes sense for self-serve, you build a product that makes sense for enterprise. And there's just a bunch of things that each of these things need that are like pretty mutually exclusive, right? But then you build your business model around that, which actually is like more restrictive. So like if you take Brex's thing, and I'm obviously very educated, but also biased about their situation.
Talk
But
about it as much as you want.
well, I don't want to talk badly about them, but I think they would admit that like their business model didn't make any sense at the bottom end.
Can we give some context?
What is the bottom end?
Yeah.
Wait.
What's the actual story here?
This
what
is
would
great.
happen
Yeah.
to Brex?
Okay, so the problem is the two major hidden costs of fintech are customer support and fraud, right? And it's not obvious, but they're actually like pretty expensive and they build up. Yeah, if you look at Brex, they have like pretty great customer support that's ubiquitous, like a 24/7, you can call anytime. And that makes sense for, it's a funded startup, etc. But if someone shows up on a website and they're like, oh, I'm a business and they're SMB, the chances are that they have less than a few $1,000s, that they're gonna, that they may not succeed. They're probably not going to do tons of payments using the card. So you're just not making that much money on that, which is fine, right? You can, like in software, you can serve people you don't make any money on, right? That's the whole point of software, that like it's marginal cost of zero. But fraud and customer support do not have a marginal cost of zero. Fraud is, it's going to be, the smaller people are much harder to vet. There's going to be more fraud there, right? And with customer support, if the smaller people don't call you any less than the bigger people, right? So
Probably more.
that's what it is. So you just have to like, when you build a business model, like Mercury has always been about the smallest first, because a bank account is a decision you make at day zero. Like you start a company, you need a bank account. It's like, you can't say, in my opinion, you can't say I'm going to make a business bank account startup and not serve people at day zero, because that's just when they need a bank account. But that means we built things in a way that made sense for those very small customers. Like, we don't give phone support until you have a certain size or you use Mercury for a certain time, because we did do it at the start and it just didn't work. It's just the economics didn't make sense. We still give customer support to them. It's just, it takes, it's asynchronous. It takes a little longer, which, annoys them sometimes when they really need it, but that's the only way economics work for a free bank account. And like with, by default, we don't give a credit card, we only give a debit card. So the whole fraud mechanism there is different. You need a certain scale before we give you a credit card. Like we require 50K in deposits. But anyway, so there's a product side, then there's the model side, and then there's the go-to-market side. Like, how do you economically go get your type of customer? And there isn't like all of these things, whether it's like SMB self-service or mid-market or enterprise or whatever, like they're not trivial. Like things cost money to go acquire users, but your model might only make sense for, like, your sales model might only make sense to, like, in a certain way. So if you're used to selling enterprise, yes, you can have these kind of really expensive, these like enterprise sales people Not money, but like you can do that at enterprise. You try to do that mid-market, suddenly you're like spending, 2 years of like payback to make a sale and all of that stuff. So anyway, I think it's not easy. And actually the hardest one is going downwards. So if you're
Right.
used to doing enterprise sales,
Mhm.
it's hard to go to mid-market.
Well, because you have to find margin where you didn't find it before. Or excuse me,
Yeah, I
you,
think
you have
also
to. Yeah.
you have to find margin. You have to become like much more, like every piece of it has to become like more cost conscious. You have to,
Yeah.
it's both like finding revenue on a per dollar basis and also,
Mhm.
and then you also have to sell way more, right? Like you have to
Yeah.
sell 10x more. So
Yeah.
you have to find
Your distribution has to be
distribution channel
completely
has to be
different.
10x bigger. So I think in general, it's easier to go start like with self-service SMB and then go
Bottom up.
upwards.
There's a fascinating thing that you're saying here. So Paul Graham has 13 things about startups, right? It's one of his most famous articles. And in these 13 things about startups, one of the things that he says is deliver unusually good customer service. And we're talking about this Brex versus, well, not versus Mercury, but the two essentially choices that were made here. And sounds like what you're saying is they got caught in a sort of trap of offering good customer service, which is honestly what I do. And we do it in a way of things that don't scale. We won't be able to do it for 50,000 customers when we have that, but we can do it for under 1,000, right? And so, and it sounds like you made a deliberate choice, essentially saying, we're not going to get dragged down by this. Instead, we're going to deliver the type of customer service in the early days that is expected for your type of customer, which is, sorry, it takes a while when you're paying zero or whatever, in order to not drag the business down. Is that kind of right?
I mean, my view on it is that customer service is a product problem. And I know.
Wait, hold on. That's also really interesting. Say it slower, say it cooler. But what I mean, seriously, is that's a gem. Can you please double click in it?
All right. My view on it is that customer service is product problem in the sense that whenever I ever contact someone, it's because their product failed. I don't contact someone because I enjoy talking to their customer support. Like it's when the product failed. So we have and we did this from relatively early on, but we have a engineering product team that literally is in charge of looking at support tickets and fixing things in them. Like, what is the biggest class of support tickets? How do we fix it? And even if it's like this person people keep asking clarification for what happens when they do this type of payment. How many days does it take? Let's make it so the product answers that question in the right place as you're doing it. So, but that view makes sense because we've always been self-service first. So we've always thought, okay, like we never try to be like a relationship bankery people, right? Like I don't want to talk to a banker. That's the last thing I want to do in the morning. I want to, click a few buttons and have my things done.
Yeah.
So I do think I agree with BG. Yeah, customer service is a major differentiator. I would say even for us, it is a major differentiator. Like we do it all in house. We have real humans that can actually fix your things, but you just have to do it in a way where it's scalable for your customers. And as I said, with enterprise, there's enterprise companies that literally have a support person or multiple support people dedicated to just one of the contracts. Like that.
That's what we do for our customers. Yeah.
But
Has anyone ever go ahead?
I was just saying, when you're doing that, it's not economical at that stage to have an engineering. Like when you have a support person that can just do a few things, like you don't always spend engineering resources on going and fixing like some of these things. You go do that in different ways. Whereas like for us, we're like, we would rather, have zero. If we can get a 2% efficiency by having engineering or product build something or even change some text or whatever, we will just continuously do that every day and that compounds.
So I believe completely in your model. So Slootman and Amp It Up, for anyone who doesn't know, who's the CEO of Snowflake, says CSM as a function shouldn't exist. And it's not that you shouldn't have relationship people, but they should be either built in the engineering or the product org. I think we've all worked with those enterprise companies out there. I'm a customer of one of them, where it's like, I have a CSM person. Their job is to do absolutely nothing besides wrangle support engineers and account executives. What did you think when you built this org chart? It makes no sense that people don't know don't know the product, and this could be all done self-service. We've stopped interacting with our CSM at that specific vendor. It's one of the wildest things I've ever seen. So your version of self-serve, trying to fix it in the product, or embedding it into the product or end work, it really speaks to me.
Yeah. And I mean, support people also don't like answering the same thing over and over with the same thing and going
course.
like, doesn't the product just improve and make it so I don't need to do this?
Even
one
at the early scale, one of the things, by the way, you guys are in 201, 301 territory, which I love, is staying away from 101 podcast territory. Even in the early days, one of our first 10 people here was a support engineer, not just a person who's going to take the call, but a person who can fix the thing at the same time. And it's a great way to learn other people's code and watch other people's code. But you also can, that way there's no translation that needs to occur between the CSM and the engineering and product side, right? So it's interesting to connect stuff like that. That was someone else's idea, my co-founder. I would never have thought of it, but that kind of stuff does make sense.
Did it scale? Are you still doing that?
But we're not a big business. We're a 10 million raised business. So there's like under 20 people still today in my business. Will it scale? I'm not sure, but it's one of the few experiments I'm willing to run. I have a big thing where I don't want to run experiments in the org, because all that I want to do is run the business and innovate in the business for the customer. And so this is one of the few kind of experiments that I'm willing to run. But what you guys are talking about is really interesting because it's kind of shaking my foundations a bit.
Given the time here, I wanted to switch up topics and kind of go into maybe our audience, hopefully our founders and series of other startups. And we like to include some of the daily tech news. So right now we're in January 2023. It seems pretty tough to raise larger rounds. I wanted to even put my company up against the panel here and also get Immad. You've seen so many companies, you've raised so much money as well. So we're in a position that our growth is pretty much, I won't say what the numbers are, but extremely like 95th percentile growth. We'll be cash flow positive this month, which is awesome. I look at this opportunity right now to move ahead of our competitors, but I've talked to some VCs, and maybe this is only an N of one. So this is where I want to get kind of what you guys' opinions are. But a PE firm turned VC writes B and C checks. So we're now going to be raising our Series B. And they're basically, this year, we're basically not writing any checks at all. We're going to sit this one out to see what interest rates are going to do. Want to just throw that out there. Given 2023, is this going to be a good time to raise? I'm probably going to go to market at the end of this month, just because we have unbelievable metrics and I'm willing to take the valuation hit to just kind of leapfrog our competitors. But kind of wanted to throw that out there and share a little bit about what are going through founders' minds. Like, my thought process is either, okay, we're going to be cash flow positive. We keep the same team size. We could continue growing at like a reasonable rate, or we could raise like an okay B. And so we could wait for another year and probably raise double or triple. And the multiple is probably going to be like 5x what we would get today. And so is it worth it to take the capital? Could it even go and get the capital to begin with? Especially given the Series B and C crunch. What are your guys' thoughts? I don't know, start with Immad. You definitely have, Julian as well, you've raised a lot of capital, but maybe Immad, you may know the market a little better right this second. What are you guys' thoughts on that?
I mean, I think number one, there's this like class of funds, let's call them there's different names for them, like crossover, hedge funds, PE funds, etc.
Yeah.
That class of funds can invest in public and private companies. Those people are in a pretty interesting situation because their public portfolio basically shrank, especially if they're tech or growth focused, their public portfolio probably shrank by 60, 70%.
Yeah.
But their private portfolio is still marked up to a pretty similar level. So if their previous remit was to go 50-50, now it looks like they are 20-80, right? And then on top of that, if you look at public companies, I mean, we don't have time to do all this research, but there's like a ton of like high growth tech public companies that are like trading, like their market cap is lower than the amount of money they have in their bank account. It's actually kind of insane how
Open door.
there's a lot of companies out there. So they have this two things, like it looks like the private, allocation is like over allocated, and B, there's just so many bargains in public things where they can just buy in and out all the time, right? Like they've got full liquidity there. It's super easy to do. So I think you just talk like those types of investors basically stopped investing like in B plus rounds. They're still doing seed and series A for there's like slightly different dynamics there. But in anything like pre-IPO down to like B, they're just not, it like logically doesn't make sense for them to interact with you as a company because there's so many bargains in the public side. So I think you're just talking to the wrong person. I think the people with dedicated growth funds, like all the major VCs basically started in the last few years, those people still have those funds and they still want to deploy them, and they will still deploy them. Then it becomes like a little bit about like price finding. Like last year, the market was just really liquid. So yeah, normally the problem with any private company is like there isn't a price. But yeah, when I did my Series B last year, I basically talked to like 3 or 4 other unicorn founders. I was like, what's your revenue? What's your growth rate? What was your valuation? And, they told me, and I was like, okay, sounds like my valuation should be X. And then maybe I did
Right.
X plus 10% just because I can. And but it was like a very much, the market sets the valuation. I wasn't making it up. I was just like, this is the comparables but no one's done any rounds in the last few months.
Yeah.
Or
Right.
there's only been rare rounds. So who's going to set the price? Like the public market's down by 80%. Kevin doesn't want to take you probably don't want to take your revenue times 10x. I'm assuming, Kevin.
Kevin,
Well, our revenue is pretty high. Yeah, honestly, that may
Net
not be a
revenue?
bad deal.
You take net revenue times 10x?
No,
Someone's smart and asked the real
no,
question, not
no,
gross.
It's not that. It's
Don't
not
give me
that.
a growth, Kevin.
Kevin, am I right? Is it a Series B or a Series C? I forget, even
B.
though I'm an investor. Did you say C?
B.
B. So the conversation that I had with Andreessen Horowitz last week, just by email, because I talk with them about rounds regularly because I want to be kind of time things properly, is they said that Series Bs at the moment are almost impossible to do. And I don't know your detailed numbers, but they said it's almost impossible to do. You need to be growing 4x plus for anyone to have any interest, which is, by the way, just to be clear to all listeners, is an unusual growth rate for a business that is at that stage. Series B companies typically do not 4x. If they do, that's exceptional. And so they were comparing that to Series A because we were talking about what a Series A looks like for Practice, my company. And so I think people are shrinking back from it. I don't want to say inflated valuations. I don't know whether yours is or not. Probably not.
Mine was not. No.
If I remember
learned from my
correctly.
last company not to take the high valuation.
Not to take.
Yeah.
Right. It's one of the lessons from another one of our hosts here is all problems can be solved except inflated valuations. Immad, you bring that up, and it's interesting because you said, oh, it should be around, this valuation because we have about the same revenue as these other companies. It brings up a point that some early stage founders for the first time don't know, which is that the valuations aren't just made up. At the Series Seed stage, they are vaguely made up, but really they're actually picked from with a lot of different other kind of future thoughts in mind.
I would say in 2021, they were pretty made up.
They were made up.
Yeah.
But there was like, I mean, at any one of these stages, whether it's seed or A or whatever, there's just market comparables. You can get to enough data points. You can go, okay, this is what the market is doing. But it's much easier at the early stage because there's just the market of number of companies at seed at Series A is bigger. So you've got way more data points. But yeah, I think it is a tricky time right now, Kevin.
But if you have, so this is my pitch, and I'm very outspoken to VCs when I talk to them as well. To this one person, N of one. And obviously I'm not going to base any of my decisions on that, but it was just an interesting first conversation that I had with somebody. I was like, this is the time to make your career. Like you as an investor, like you could get amazing companies at discounted valuations. If you have a founder like myself that I'm basically making, I don't need to raise the money, right? I continue on and we'll have a great year, but I'm looking to take a little more capital, double the team, maybe triple the team, and just leapfrog over our competitors and own the whole fucking space. And I'm like, I'm realistic. I'll give you a realistic valuation. This is where you can make your career as a VC. It's not when you're going and chasing all of the other things, all the other hot things that may work out or may not work out. It's when you're zagging when everybody else is zigging. Like you need to go against the grain
I
to
mean, Kevin, the
really make
problem is like
I
there is a set of VCs that will do that. It's just the set of VCs is maybe 10% of total VCs.
Yeah.
that's a great point. That's a
And
great
Immad,
then
haven't
the amount
yeah.
of companies out there is at least the same number of companies. So it's just, yeah, these rounds are like at least 10x harder is basically the statement. And they're getting done. It's not no one's doing Series Bs and Cs. It's just way, way hard.
Immad, and Kevin, I'm so interested to dig into your point about like 90%, let's use Immad's number of 10%. 90% of VCs are, here's one of the things, I'm going to say it real cool and slow, the way that I demanded that Immad do so, is VCs are rational when it serves them, when they've decided they want to do a deal, then they'll price it to perfection, looking at comparables, going, it should be this valuation, we should be paying this much. They'll model it out 10 to 100 times X what they need to get a price that they want for it, or to define themselves as to why they can't do it. But in the early stage of a deal, they will absolutely, am I talking slow enough for you? They will absolutely be like, I don't like this, I can't tell why, and then they'll rationalize it away. And I'm not going to say that I'm smarter. I'm not an investor like that, like the way that Immad is. This is the way deals get done. It's pure, it's raw emotion, and there's so much fear going on in the market. It's just impossible to get any interest at all, regardless of whether it's a good deal or not.
So there's something called the efficient market hypothesis, and this is a tool. And I'm a finance major from college, so it believes that all markets are perfectly efficient. The reality of that is they aren't. And I was a VC at Norwest between 2009 and 2011. You know what the lesson was in hindsight on that? We should have done every deal that was good that came through the door. Did we? No. But yet, I'm sure in 2020 and 2021, people are doing every crappy deal that comes through the door.
Yeah.
Most people have groupthink. They don't actually do independent work. And Kevin, to answer your question, I don't know the right answer, but it's not efficient right now. So everyone's just sitting there and saying, well, interest rates are up. I've been told that we need to look for free cash flow. So I'm not going to do deals right now.
Well,
you need to find someone who's going to dig in and take a differentiated view. And in investing, you get paid for differentiated views if you're right.
You do. Also, so we all know this here, being second time, well, Immad 4-time founder or whatever, and also 300 angel investments. He's got a lot more experience than all of us do combined. But when it's not even up to the individual investor, right? Like they have to go and sell that to the partnership, and that's maybe where it's probably even harder, because I have a lot of people that I've talked to and they fall in love with their business and the story and all of this and our metrics. And I'm just like, can you actually get this across the finish line? Are you able to actually convince the rest of the investment committee, which is typically made up of, I don't know, what do you call it? 5 other GPs at a fund or something like that on average. I don't know, some more inside baseball, different. Some firms are, what is it, majority, other firms.
It's all over the place.
It's all over the place, but they make their own decisions. But can that one person who really fell in love with your business, has done all this diligence, can they actually get it through the investment committee and do that deal? And that's where I think that probably a lot of deals will get killed. And maybe that's even the reason that a lot of these GPs won't even bring into the investment committee, because they've decided as a whole that we're going to hold out. We're going to hold out for the next 6 months. We're going to talk to a lot of companies. We're going to seem like we're doing deals. We're going to say we're doing deals on Twitter. I just saw the thread. Who's doing deals? Everybody's doing deals. That's bullshit, because we don't actually see them happening. But also at the same time, this really pisses me off. They're just wasting founders' times as well. They know that upfront in the meeting that
100%.
they're not going to actually even take this to the investment committee, even if it is great. That really kills me. But they're kind of paid to do that as well.
Kevin, the same way that you are testing the market by taking your meeting, they are also testing the market and trying to, they're like, what's out there? What does it look like? How desperate is this person? How interested in this person? You know, that's the thing, is they thrive off of information. And the more you give it to, it's like, I'm playing one of my cards here, but it's like, the more you give VCs information, the more you give them power. And so I prefer not to do that.
Well, Julian, I love what you said. I love to get Ahmad's take on this too. I don't know, say it nice and smoothly and slowly. Like you've been asking us to, the first meeting with a VC is to make them fall in love with you. And every subsequent meeting is to make them not fall out of love with you. Did I summarize that? Was that slow
You
enough?
said
for
it
you
exactly
for that?
right. And it was
Okay.
told to me by one of the best fundraisers in the business on the VC side that basically that is a fundraiser for their LPs, right? And
I
so
won't say I feel like we're being a little bit cynical here. I think to say, the earlier part of the conversation we had, a lot of at least in-person interaction is about like people getting to know each other. And like,
Totally.
I think VCs are not just purely meeting because they're like, oh, I need to fill my calendar and just gather information and suck it up into my vacuum. I think there is an element of, hey, they want to build a connection and that's the game they're in. And I think actually founders underestimate the importance of that sometimes, that,
Yeah,
when a
that's
VC
totally
invests
true.
in you, they're making like a 10-year commitment to talk to you once a month.
yeah,
They do 1 or 2 investments a year,
Yeah.
so it's really important. They want to get to know you. I just before we end here, because I know we're getting up time, I actually do want to take back my comment. I would say that there are a small percentage of VCs that will take meetings just to seem busy and all that stuff. But I do truly believe, with your sentiment, Ahmad, that the best VCs truly do want to understand your business. Maybe this is not the right time for them to invest now. Maybe it's going to be later or something like that. But they really do want to build that relationship, understand your business, and they're not doing it for nefarious reasons or to waste anybody's time.
No,
But I will say that there is a small percentage, maybe that's 5 or 10% or 20% or something like that, that they are just trying to fill up people's calendars
I
and
mean, I
bring
think
things back and all that.
I'm sure Twitter will get mad at me about this, but I think like associates at VC firms are like a lot
Mm,
more. Yeah, they really are tasked to do as many meetings as possible, and they generally
that's
do
right.
not have decision-making power at that firm. So there, I think it's even worse. I think if someone who can make a decision to invest in your company is meeting up with you, and I think there is, generally speaking, they don't want to waste their time either. So there's at
Right.
least some interest there. But yeah, associates can be. I think often actually, this is probably a first time founder thing as well. Yeah, people tell me every now and then, like, wow, like Sequoia just emailed me, like they want to meet up. Who was it at Sequoia? And it's really
Yeah.
is this really going to be someone that's going to help you when it comes to investing?
I'll give you a counterpoint. Maybe it's a way to sort of slowly the episode is the associates are all looking for that thing that they can do right in their career. They're all looking for a shot because I think a lot of people know. And by the way, inside venture partners, like a random thing, but I have found that they are the best associates. I don't know, Andy, whether you're nodding, whether you agree or not, but
No,
And
I'm
so-
nodding. I agree.
you agree. Okay, great. And so shout out to Inside Venture Partners associate. And so
AJ talking about you right here.
if you are an associate at a firm, the likelihood of you becoming a partner at that same firm is insanely low. And so you have a
That's right.
shot at finding a company and doing that deal. I have been, I would say, pretty solid in my career at finding a junior person, getting them to believe in me, and then flipping that and selling that to the senior person above them.
Oh, really?
And
You're
and
better
so-
at it than I am. Well,
yeah,
Andy,
yeah, we all have our skills, right? Yeah. So anyway, just want to kind of give that counterpoint to give you a.
Why don't
that's-
The problem is they have to go sell it in their
Yeah.
own words afterwards
And
versus you selling yourself.
Andy, were you an associate at Norwest?
I 100% was.
In the 2 years you were there, was there a deal where you talked to an entrepreneur and you then got that company? You were the first point of contact and you got that company funded?
Yes.
Oh, wow.
It's
See,
very atypical.
There we
though.
go.
Ignore that advice and don't meet with associates.
There we go. Why don't we're up out of time here? Why don't we end it on that note?
Ahmad, great to have you.
Yeah,
it was super
thank
good.
you so much. This has
Yeah.
been awesome. Thank you for your time and also your service to the startup community. 300 angel investments. You were a YC partner. I know Mercury throws on awesome events for seed founders and Series A founders. Anything else that you want to plug at the end here?
No. If any Series B VCs are looking, you know who to contact.
Hey, I'd like an invite to New York-based events, Immad.
We have to get quietly out of his house.
Seriously, somebody wants to meet me, I think.
Hey, yeah. facts. It's the Second Time Founders podcast. Talking tech news, the show is a must. Not some billionaire trying to sell you their book. We coming from a real place, plenty ups and downs. Got some insights, join the discussion now. We being honest and raw, giving you real talk. We've been at the bottom and made it happen and much more. The Second Time Founders podcast. More building, less talk.